This is Dr. T. Varalakshmi discussing you about the trading account as a part of business economics and financial analysis. Trading account is the first step in the preparation of the final accounts. Actually, in the 6 steps of this accounting, the 3 steps like journal, ledger, trial balances will be treated as a pre-final accounts, whereas the trading account, profit and loss account, and the balance sheet will be called as the final accounts. So here the trading accounts, all the direct expenses and the direct incomes gained by the organization is going to be recording in a systematic manner, that is called as the trading account. All the direct expenses. So generally the organization is there. If that organization has to identify the direct expenses, means the labor charges, the raw material charges, as well as the labor machineries expenditures at manufacturing level. Generally at a production level, the direct expenses will be called as this one, and they have purchased of the raw materials. And the direct incomes, like say, through the sales only the organization will get the direct incomes. Later all the indirect incomes anyhow they'll get in the form of the interest, commissions, etc. But they will be treated as this indirect incomes. But the direct income for the organization is through sales only. That direct expenses and incomes are recording in a chronological manner. That is called as this trading account. So all the information about the goods which they have purchased or the sold, returns, gathered, everything is going to be recording here under the trading account. If we see this pro forma for this trading account title is very important one. In every accounting step, title is very important one. For the period ended. So because at the end of this financial year, they will start preparation of this trading account, profit and loss account, and the balance sheet. Before to that one, the organization will prepare this journal day to day. They will prepare every month a ledger. They will prepare every quarterly, half yearly, like this one. They will prepare this trial balances. But at the end of this financial year, they'll start this final accounts with the trading accounts. That's why the title will indicates this trading accounts of XYZ company. So that company's name. And for the period ended of, let us say 31st March 2021. So like this, they have to mention the time period of this trading account, and always on the left hand side the debit balances and on the right hand side the credit balances. Because all the expenditures should be on the left hand side, all the incomes should be on the right hand side. The debit side, all the expenditures, that too the direct expenditures associated with the organization has to mention, like if they have any opening stock which is from the previous one, if it is adding, then the opening stock they have to write. And because that is going to be expending for the next year, that's why the opening stock. And if any purchases were added, and that too if they have returned any purchased goods, that has to less from those purchases, and the net amount of the purchases only has to take into the consideration. And the expenditures, direct expenditures for the labor, whatever they have paid, the wages, customs and imports duties, carriage inwards, that two expenses here inwards are only they have to record. So inwards means, carriage inwards means for the goods if they are purchasing, if any transportation charges if they have paid, that only they will mention as a trading account. But if the goods if they have sold, that will be they have to mention under the profit and loss account. And the royalty which they are paying, manufacturing expenses, packing expenses, etc. Everything we have to mention under this debit. And on the credit side, the direct income by the organization, the sales, are if we less this any sales returns has done, and with the closing balance of the organization. And here, if if their expenditures are all assumes that the total of the expenditures are all 50,000, whereas the income is 60,000, means there is a profit of 10,000. Profit of 10,000. This profit will be treated as gross profit because they have not paid the income tax yet. So after paying the income taxes and all the other interest expenditures, then only it will be called as the net amount. So here the gross, the two are profits. To balancing that one, so here this is 60,000 and they will write it as gross profit to gross profit of 10,000 and they will make the total balances should be equal. The total balances should be equal and the gross profit they will mention. If it is reversed, that is, if their expenditures are all 50,000 and if their income is only 40,000, 40,000 means they got the loss because expenditure is more and the income is less, means loss. So that they will treat it as the gross loss of 10,000 and here on the credit side it has to mention and both the sides it has to balance that amount of 50,000 and 50,000. That is the pro forma for the preparation of the trading account. So if you see this example of this trading account, opening stock amount, if the purchases are all there and the purchase returns has to less and the final amount we have to take here. Carriage inwards are only mentioned under this trading account, wages, customs duty, octroi duty or anything they have mentioned that they have to write here and this sales returns and the closing balances. Here, the debit balance is lesser than the credit balance. That's why the remaining balance of 2,29,400 treats as a gross profit, which can be transferable to the profit and loss account in the next profit and loss account. And 8,70,200 rupees is going to be equalizing. So that is the pro forma for the trading account. So if you see this features of this trading account, it is like a nominal account because it is treating the expenditures and incomes of the organization and it consists of the revenue nature only. That means which gives the benefits to the organization only taking into the consideration and the closing balances indicates the gross profit or the gross loss is easily identifying with the help of this trading account. On the debit side, the cost of the goods are sold, everything is going to be mentioning, whereas the sales returns is mentioning under the credit side. So that's why credit balance represents the gross profit and the debit balance represents the gross losses of the organization. The objectives of this trading account is to identify the direct expenses of the business transactions, to show the gross profit and gross loss, to show the net purchases and sales of the organization, as well as how much expenditure has done for the producing of the goods. That is, the cost of the goods sold can be easily identified, and this will help them to fix a best price to the product and to know the expenses and stock positions and efficiency of the business transactions. This trading account helps a lot. So the advantages of this trading account is it provides the information related to the gross profit and the gross loss, and that will helps them to set the standards of how to improve that losses and how to improve the profits and reducing of the losses of the business. And it will also helps in computing the gross profit ratio of the organization to set the targets for sales and the selling price fixations too. And it allows the companies for the preparation of or to compare the opening balances and closing balances of the organization to take the best decision on purchasing and maintaining of the inventory of the organization. And it has certain limitations are all there. That is, it only defines the gross profit and gross losses information. The net loss, net information is not taking into consideration. And a report is not giving the full-fledged information to the company shareholders. And indirect expenses are all for this one. Separately, a profit and loss account is preparing. So that's about the trading account, its pro forma, limitations and advantages. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.